We get started with the video, I have a very special gift I want to offer those of you that sign up for my newsletter below. Now, I will only be offering this special gift this week only. So if you want a list of my 5 favorite stocks that I love to sell options on that give me the most premium in my account, I will be glad to send that to your inbox. You just have to sign up for my email list below. Hello, everybody, and welcome to the Trading with Ashley show. This week's videos are all about freedom. So this particular video means a lot to me because it is discussing the freedom that selling options allows you. For those of you that watched my first video in this series, it was all about cleaning up our portfolios so that we have freedom with our portfolios to be able to sell options. So today's video is going to talk about the flexibility that options gives you. So let's talk about first what my life was like before I was a professional trader. I worked for corporate America for almost 30 years. Now, I'm not complaining because I did receive a salary that entire time and I had health insurance, and it taught me a lot about what a company that is listed on the New York Stock Exchange goes through. So I got to learn the market from the inside out and actually being a part of a large company in corporate America. And that has helped me better understand stocks and trading and what Wall Street's looking for. So for that, I am very thankful. But quite frankly, I gave up so much of my time. And that's what it's like in corporate America. You are really expected to be at work for a certain amount of time. And when you're away from work, especially if you're in a role like I was in, there's that constant need to be connected via your phone or Zoom meetings. You always have to be available to offer guidance and assistance. And that's where it really became a challenge for me. I mean, there were many nights sitting at dinner that I'd be trying to enjoy engaging with my family, and I'd see a message come in from my boss, and I could ignore it, but it was really hard to focus on even interacting with my family, knowing that my boss wanted a response within a reasonable time. In his mind, it was about an hour. So that was a constant strain on me, and it really changed the way I even enjoyed my off time because I was never really off of work. So if you're dealing with something like that, I am here to share with you that there is a better life if you are blessed enough to have enough money to start producing income off of your account. Then you too can have this freedom. And so what I'm going to show you today, I am going to show you how to take an account. We are going to start with $100,000 because that is a lot of money, but it is a reasonable amount of money for someone that is wanting to either supplement their income or live off of their income. And I am going to show you how you can utilize that money to start to create a weekly salary for yourself so that you have that extra money to pay the light bill, to buy groceries, whatever you need. And this is how a lot of my own community members start with me. They start with me usually with an account size anywhere between 10,000 and up. But most of them have a goal to get to 100,000 because something happens after you get to 100,000. It's really a lot easier to start creating consistent income. And I think it's because it opens up your portfolio to selling options on a variety of tickers. And that's what really helps get people going because you, at that point in your trading life cycle, all the stocks that you had always wanted to sell options on, now you truly have the cash available to do so. And it allows you to pull in more income. So we are going to start with a $100,000 account, and we are going to look at how we might be able to utilize that to sell options. I think you're going to love this example. If you are working with $100,000 in your account, one way to look at a potential monthly income might be to consider that selling options you will make approximately 30% annually. Well, if you break that down, that equals about $2,500 a month. Now, this can increase if you are put the shares of quality stock and the shares rise and they're called away. In fact, in the last year, I produced about an 80% return on my investment. So keeping that in mind, let's go look at some particular trades that I was able to trade live to give you an idea of how this would work. So one of the first stocks I want to show you an example on is NVIDIA. So NVIDIA is having a small red day, not significant, but as of filming this video, it's trading at 143, down almost about 0.5%. But what's more important is looking at a couple of technical indicators to give you a better idea of what might happen. So if you look right here, this RSI is at 61. So we're over 50, meaning we're still in a bullish mode, but we're not yet at 70, which means we are overbought at that point. Also, when you look at the Bollinger Band here, we are starting to approach the 20-day moving average. This is on the 3-month chart, which is at around 140. So if we were to acquire NVIDIA at 140 and we're comfortable holding on to NVIDIA for a longer amount of time, if we believe in the stock, then I would not mind getting assigned at 140. So we could go and just buy 100 shares now at 143, or we could sell a put to purchase the shares at 140. Now, we may or may not get assigned. If NVIDIA keeps going up away from 140, we won't be assigned on our expiration date, but we will get premium for putting the money in play. So let's go look at a live example. I'm going to sell a put on NVIDIA at this level and see how much premium we can get. If I go to my broker and I go to options and I am looking at selling a put, so I am going to select the 140 strike because that's the one I felt like I'd be comfortable with. And I would do sell to open. It's the put. July 18th is my expiration date. And there's the 140. Look, it's paying $3.50 a share. So I would receive $350 for putting up the money to buy NVIDIA at the strike price 140. So I like that. And I'm working with $100,000. So I could, sell more than one contract for sure. But you typically want to break up $100,000 over anywhere between 5 and 10 ticker symbols. So let's look at populating this trade and see how much we can get in premium for selling this put. I'm comfortable selling a couple of puts on NVIDIA because this is a quality company, and if I were put the shares, I would have to wait until it started rising above 140, but I am receiving some great premium for this, so I don't mind waiting until it recovers. So I'm going to go ahead and put this order in. I'm going to put $350 here as the price of the order that I want to fill. And then you can see right here, I am going to receive $700. Now it's showing me my max loss is $27,300. What it's looking at is it's looking at if NVIDIA pulled back to 0 and I was put the shares, this is the amount I would lose. But I'm not worried about NVIDIA pulling down to 0 at this point because they're a very profitable company. Now I'm going to receive this $700, which is great. This is my premium. And if it expires worthless, meaning if on my expiration date, July 18th, NVIDIA is trading above 140, I get to keep 100% of this, and then my money is released to me. So let me go ahead and execute this trade. It filled right here. You see these 2 contracts for July 18th, and I received this $698. So now this money is in play, and I just have to wait to see what happens. Let's go see if we can find another ticker symbol, and we'll go ahead and look at that same expiration date, July 18th. Let's look at Amazon. Amazon is another profitable company as well, and it's in a similar situation. It's at 50 on the RSI, so it's still in a bullish mode, and it's actually right under the middle of its band at 208. So now I'm going to look at the next level of support for this stock, and it looks like right here, you can see this is the 200-day moving average. This is 204. So I would be comfortable doing anything around here because more than likely what will happen is it will use this as a level of support and bounce up. But if it does not use it as support, that's okay too because I want this stock Amazon and I'd be happy to hold it until it recovers. So let's go see how much premium we can get to sell a put on Amazon expiring in July. Okay, this looks like a good opportunity because this is the 205 strike, very close to where that 200-day moving average is. And look, it's paying $455. That's $455 a share. And this will provide me a great opportunity. Now, remember, I'm trying to use 100,000. So this would use 20,000, a little bit over 20,000 of my equity. So I think I'm just going to sell one of these. So I'm going to sell one right now. And then let's go ahead and see how much we get for this. Okay, perfect. Here it is. It went ahead and executed at that 205 level. And look, I received $464. So I'm already over $1,000 right now for today's picks. Let's see what else we can find. Now, Robinhood is a stock I really like. I actually have a lot of Robinhood, and this is a stock that they continue to reinvent their business model, and they are starting to appeal to individuals with larger account sizes. So I think there's a lot of opportunity in the future for this stock. They're a very profitable company. So I would think I would take advantage of this red day and go ahead and sell some puts. So where do we want to sell puts? Well, again, the RSI is over 50, so we're in a bullish mode. The middle of the band is right here at around 71. So I might look at something around 70. That's a nice number. And if people decide that they agree with my thesis that Robinhood will be good long term, they may decide to go ahead and start purchasing it. And a lot of times they like to go right there at that even level. So $70 might be a good strike. Let's go take a look. All right, here's the trade, and it looks like it's paying close to $2.50 a share. So this would be really good, and this would provide us some good premium. If I'm looking at breaking up that 20,000, I could afford 2 contracts on this particular stock. So let me go ahead and execute this trade. Okay, this one executed as well, and look, we received $500 for this trade. Let's go take a look at our next stock. We're going to look at Tesla. Now, Tesla doesn't exactly fit the bill on what I typically look for. I like to see a stock pulling back. Tesla's just coming off of a very successful event with the robotaxi event, and so it's running high today. It's currently trading at $350 at the time of this recording. But if I wanted to go ahead and sell a put on this stock, I can. It's just if I were to wait for a red day, I'd more than likely get more premium. But since we're recording this all together, let's look at a level of support for Tesla. Now, because it's having a successful event, the likelihood of it continuing to run up is good, but I still want to get it at a price that's lower than we are today. So let's look right here at 330. That's the middle of the band, and that might be a reasonable point to get into this stock. It is trading at 60 on the RSI. If this was 70 or above, I may just wait, but because it looks like it does have a little bit more room to go on this good news, I'd be comfortable owning it at 330 at this point. So let's go and sell some puts on Tesla at this point, 330. And here's the ticket. Now, I just have enough in my budget remaining for one of these trades, but that's okay because I'm getting paid quite a bit for it. So it will require for me to put up the money to take ownership of 100 shares. That's going to be the $33,000 right here. But for that, I'm going to be paid handsomely, $1,350. So let's execute this trade and then we'll tally everything thus far. Okay, perfect. This one filled at $13.57. Now let's take a look at our totals to see where we are in premium if we're looking at that July 18th expiration date. If we calculate all of the capital used for the trades that we did today, we are looking at about $95,000 in capital that was used. Now, when you add up all of the various amounts in premium we received a little bit over $3,000. It was $3,018. So the way to see what our return will be if we continue on this path would be to take the premium, which is $3,018, divided by the capital needed to produce that premium. So that would be divided by 95,500. That equals 0.0315. Now you multiply it by the formula to get your annualized return, and we are looking at a 45.99% annualized return. So what makes this so powerful is we're looking at an almost 46% return, and that is not even accounting for the fact that we may eventually be put some of these shares and then we get to enjoy the ride up, and that's additional money to add to the return. Now, if you compare that 46% to what you would get annualized if you just put your money in the market, you're looking at about an 8 to 12% return on average for the S&P 500. So it is just really hard to beat the income that can be produced by selling options. Now let's discuss the risk associated with selling options so that if you decide to do this for a living, you're fully aware of how you might need to adjust your income as a result. So if you're in a bear market that lasts for any length of time, it's going to be really hard to produce that income because the stock market would not be going up. Now, you can always sell covered calls, and selling covered calls would allow you to profit when a stock pulls back. but it still doesn't account for the additional income you can make when the market is pushing forward. So if you're in an extended downturn market, it's going to be hard to produce income to live off of. So for that reason, if you choose to do this for a living, I would always have anywhere between 3 to 6 months set aside for living expenses that you might need to tap into if the market is just not cooperating for you. Okay, here we are. It's just been a few weeks since I took out all of those trades. They don't expire for a couple of more weeks, which would be July the 18th. But I thought I would give you an update on how these trades are looking because this is a very important part of the process. So the good news is on the first three tickers I went over with you, those stocks have now surged ahead. So the contracts I took out on them, they are almost 90% in profit. Some are over 90%. So what does that mean? That means that now, it's been just a few weeks, I can buy back those contracts and enjoy almost 100% of the premium that was produced. I get to keep that. I can buy back the contracts for a lot less, and then I can use that money because it will release my money. The broker will release it for me to make other trades. So the returns that you were seeing that were really stellar, they're actually going to accelerate because now I get control back over those funds to look at new trades with. But we did have one trade that went below my strike price. Can you guess which one it was? Okay, it was Tesla. If you remember, I took out that $330 sold put. So I agreed to buy Tesla at $330. Well, Tesla pulled below that. At the close of day yesterday, we're sitting right at about that $315 more. So what does that mean? Well, let's talk through it. Now remember, I got quite a bit in premium to make that trade. I got about $1,300, about $13 a share. So right now I'm at about a break-even point if I were to get assigned the shares and Tesla stays about where we are right now. So that's one thing I could do. I could go ahead and take assignment of the shares if we don't push ahead above $330, and then I could start selling covered calls. But remember, there is a little bit of a risk because if, let's say I could assign those shares at $330, yes, I was made whole with the premium, but I didn't make any money, and this is all about creating income. So one thing that could happen, it could pull back maybe to 300, and then I'm sitting on a loss, and I have to wait for recovery to do anything with those funds. So there's one more thing that I could do on that Tesla trade, and this is something that when you sell options happens quite often. You're able to roll the trade out further in time and lower in strike price. That makes your trade a little bit safer, and if you're rolling for a credit, you're actually getting paid more money. So let's talk through the dynamics. So I had received around $1,300 to make that trade on Tesla. It was about $13 a share. Well, now that same contract today, since Tesla's pulled back, it's worth about $20 a share. So that's a $700 loss for me, $7 a share. So, like I said, I could take assignment or I could roll the contract. Now, if I rolled it, what I would want to do is I'd want to go out in time. I look for different contracts. It looks like I could go out to August, maybe that third week in August, and I could roll down to $320 a share, and I could get a credit for the trade. So if I bought back the current contract, which is around $20, I could sell the $320 strike for about $26. So for that, I would get a $600 credit. Now, I am tying up my money for longer, so I have some decisions to make. So what I think I'll do on the Tesla trade, I'll just kind of monitor it and watch it this week to see, do we pull ahead or do we pull back or do we stay the same? And then I can decide what I do at that point. But I wanted to give you an update. This is such a big part of the process. It's managing the trades. So what I'm going to do, I'm going to take those first three contracts. I'm going to buy back those contracts, freeing up all that cash. I'll make new trades this week, and then I will continue to monitor that Tesla trade. Now, for those of you that were inspired and you would like more thought-provoking trade ideas, well, you might want to consider being a part of my community. I help my traders all day long with different trade setups, and we have been really doing well, making a lot of life-changing money. I would love for you to be a part of that. Remember, if you're with me trading with Ashley, there is no trader left behind. Now, if you want to watch the video that I did before this one that helps you get your portfolio all cleaned up and ready to go, I'm going to leave it for you. Here it is right here.